Imagine market not as a chaotic mess of numbers and charts, but as a living system with its own rules, rhythm, and even mood. Many beginners start to jump straight into the water without knowing where it's shallow or where it's deep, and that's why they often get lost. So today we'll break down 3 key things that will help you to see market differently and make more confident decisions. First of all, we'll talk about the levels, the foundations of any trading. Also, candlestick patterns is the language the market speaks to us, and the indicator combination that helps you to filter all of the noise. So these 3 elements are like the map in the world of trading. And get comfortable, get yourself tea or coffee, what you prefer, and let's get started. So guys, let's get started. First of all, we're gonna talk about support and resistance levels because this is the basics. So the support level is a zone where demand for the asset increases and the price stops falling. So you can think of it as a floor that prevents the price from dropping further, and traders often start buying here, which creates upward pressure. So let's check it out on some of the currency pairs so I can draw it for you and show you in the practice. Actually, it's pretty easy to find support and resistance levels, but I understand that in the start it could be difficult to do. I also recommend actually don't change channels for seeing the range of the price, so it's going to be more easier to find these levels for you. But also about the resistance level, it's absolutely opposite. So it's the ceiling where the price often bounces back down. So in this zone, supply becomes stronger than demand, and many market participants start taking profits or opening sell positions. So let's draw it for now. So here is our resistance level, and here is the support. But the thing is that it's the main support and resistance levels for some period of time, because we can find other between this range. So for example, here is the support level for now. Here is the resistance level for now for the short period of time for our price. So here's another support level, and here's another resistance level. I hope you understand all of these lines, guys, because you can see it's just the range of how our price was moving. So for now, as you can see, our price achieved the support level and started reversing from this. So for now, it's pretty strong one. And so that means it's pretty strong support level here and resistance as well. But I don't actually like to trade on this type of the charts because we can see it's sideways market movements right now. For example, on M5 time frame, it looks a bit better as the consistent upward trend, but we're not trading for 5 minutes time of the expiration, so we switch to M1 back. So let's delete all of this here, and we're gonna check it out some other currency pair. Ooh, here's a pretty good one actually. Let's draw it. So here is the resistance level for now, and here is the support level that was actually testing a few times by our price. As you can see, our price was touching this level a lot of times before the support level was here, as you can see. So now our price either go in the upward direction, bouncing from this support level, or will go lower, breaking this support level. And it also could happen, I will explain you more about this later. And here's, by the way, the other support level that was pretty long time ago, but it's like the main one. And it is another support level also that was pretty long time ago, but this is like minimum for this period of time. So here, let's change also the colors. We can check it out on the M5. But as we can see on the M5, it looks a bit different because, again, visually, when we change the time frame of the candles, of course, our chart is a bit different. So here, guys, let's open a sell trade for 2 minutes. Because sellers is showing their power still, there's no signs of the reversal, so we are following the trend. So we already talked with you about support and resistance levels. So also what I want you to imagine, you need to imagine a ball bouncing in the room. So the floor is support and the ceiling is resistance. So until a breakout happens, the price tends to move between them. But when a breakout does occur, it can signal the start of the new move, a stronger trend upward or downward, because also our support and resistance levels is always changing, of course, because if it would not change, all of this would not make any sense, of course. So we always need to check it out, also the candlestick patterns, and to confirm our entry point with the indicators if we need, so our trade will be really confident. Also, how to identify support and resistance levels. First of all, historical highs and lows. So you need to look for points on the chart where the price has bounced multiple times in the past, so as we did, and the more touches, the stronger the levels. For example, our support level here that we're breaking right now, actually. So we opened a really nice trade. Also, second of all, it's psychological round numbers. It's not often, but still, it's sometimes happening. For example, price like 1.2 or 1.25, 2.0 often acts as levels because many traders and investors place orders around them. So that's what makes it move, of course. So we close this trade in the plus. Okay, perfect. We're gonna open here another sell trade for 2 minutes because the downward trend is continuing here. So it's pretty good. And here I want to change the color of this line. You will ask me why, but because this right now already a resistance level for our price, because as you can see, it broke and it's not the support level anymore. So yeah, now it's already achieved our previous support level. So we'll see how it will react. I hope it will go even lower than that. But also, let's come back how to identify support resistance levels. Also, it's consolidation zone. So when price moves sideways for a long time, the boundaries of that range often turn into support and resistance. For example, if an asset range between 1.1 and 1.12, for example, for days, those borders become key levels. So it's also pretty cool to know, because actually trading is consists of a small nuances, and if you will see them, you're gonna be really good at that. So you kind of need to be a nerd, checking everything, every candle, support, resistance levels. So that's how your entry point is gonna be really nice, guys, believe me. So just believe me. 25 seconds, by the way, till the end of our trade. We're confidently in the plus. So let's wait here. It's 12 seconds. Okay, 10 seconds. Okay, it's going really good. And 5, 4, 3, 2, 1, and we close it in the plus. Okay, perfect. So I'm gonna open here another sell trade for 2 minutes. Why not? We catch such a great move. Also, you can use moving averages and indicators for identifying support resistance levels. For example, don't change channels, as I said to you before. Also, a long-term EMA or SMA is moving averages like 50, 100, 200, because it's often serve as dynamic support or resistance. If you watched my previous video about moving averages, you know about that. And also, price reacts to them, especially on higher time frames. For the lower time frames, it could be a bit different. So I would rather recommend you to use Donjin channels, for example. It's pretty good. Actually, you don't even need to draw anything. You literally see the range of your price. It's really easy to identify support resistance levels by this indicator. Also, areas where a lot of trading volume took place often becomes strong levels. So big players enter the market there, so price tends to revisit those zones. So yeah, but for now, you don't need to check it out, volume and everything, because it's gonna be a bit difficult for you. The better if you will just turn on Donjin channels indicator and identify support resistant levels. And also, if you see that your price is really close, for example, to the previous support level, and you understand that it either will go in the upward direction and reverse, or can break this level, of course. So you need to wait here. You need to wait, you need to be patient to see any signs of the reversal. And if we have them, for example, as we had here, you can open a trade in the downward direction, continuing the trend. But if not, you will open a trade up. So here, guys, we close the trade again. We got such a great downward movement. I love it. When I see something like this, I'm like, oh my god, this is so cool. And as you can see, if you find a really good currency pair with a consistent and strong downward trend, you can just open 3 trades in a row. As you can see, it was not risky or something. We just open a trade, and in a row, boom, 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 we had it all. So for now, guys, we need to talk about candlestick patterns. So the first one is doji. As you can see it here, it's a candlestick candlestick pattern where the opening and closing price are almost the same. So the candle looks like a cross or a plus with long shadows above and below and a very small or absent body, as we have it here on the example. So that means that the market show indecisions and buyers, sellers, like kind of battle, but neither side could take control. Here, by the way, let's open a trade buy for 2 minutes. We can see in general is upward trend. It was some sideways movement, but for now the buyers is showing their strength. Also, we can see here the shadow on this candle showing that the sellers were trying to break this level, but they couldn't, and our price went up. So this candle with a lower wick, kinda like a pin bar, but actually pin bar characterized by small body and long tail, so the wick on one side. So the tail shows rejection of a certain price level and indicates a potential price reversal. So that's what we have, but we don't have here a small body. I cannot find for you the example. So yeah, but maybe we can check it out later. So a long lower wick at support suggests a potential upward reversal. So that's what we have here. Actually, we can open here another buy trade. As we can see, it's going pretty well. So yeah, and long upper wick at resistance suggests a potential downward reversal. And a stronger signals appear when the pin bar forms at key support or resistance levels or trend lines. Here, by the way, let's open a rollover because we have a chance. Why not? And as we can see, we got 2 more minutes to our second trade, and also it doubles up in the amount of money of the trade, but it's the risk that we take. So we just have more time for our price to grow in the direction that we need, but actually it's going pretty well for now. Also, one of the candlestick pattern is shooting star. So it's a bearish candlestick pattern that typically appears at the top of an uptrend, and it has a small body near the bottom of the candle and a long upper wick, showing that buyers tried to push the price higher, but sellers took control. I will check it out for the examples here. For example, it could be this. So yeah, it could mean potential trend reversal from bullish to bearish. But this is not the best actually example, because the key points here is that it appears after an uptrend, signaling that upward momentum may be weakening. Also, the longer the upper wick, the stronger the rejection of the higher prices. And also, it's more reliable when it forms near resistance levels or after strong bullish moves. So that's showing us the possibility of the reversal. I'm not actually the fan of trading on the reversals because it's kind of risky, and even if you have all of the candlestick patterns, all of the indicators, support, resistance levels, it still could change, or maybe you will not have enough time per trade. So mostly I like to trade in the consistent or strong upward or downward trend because it's pretty obvious. Because in the reversals, it could be tricky sometimes. You will just not have like 1 point till your profit, or just not had enough time, and that's it. And you will need to open the catch up and everything. And after, you know, for example, it was the upward trend, you see the start of the downward trend, you see 3 red candles, you see all of the candlestick patterns and more, but after the upward trend just continues. That's happening sometimes, and unfortunately you can face it and you need to do something with this. So that's why I always recommend to use only 1% of your deposit per trade, so you minimize your risk at all, and in case of something you have a choice to open a catch up. So that's how you recover your minus and still have the profit. So guys, we just have 3 seconds, 2, 1, and we close this trade absolutely confidently. Okay, perfect. And now let's change and find some other currency pair. As you can see, all of our trades, it's looking really nice. So let's find something else. And now we're going to talk about the third thing, about the indicators. So we need to click here and let's choose the MACD, for example. So here we're going to open a sell trade for 2 minutes because we can see that the last pin bars on MACD on the histogram is red color. Also, 2 lines of MACD crossing each other start going in the downward direction. Not that much because we can see some kind of a sideways market move right now. And it's not that confident here. Okay, it's fluctuating a lot. I'm already not sure about this trade. I was pretty fast of opening that. But also, what kind of indicators we can use? For example, zigzag. I recommend for beginners also to identify support resistance levels by these arrows. So it's pretty easy to do, as you can see. Also to understand the direction of the trends. Then let's check it out something else. Super trend, you can use it, but actually it's pretty slow and it's not giving you the signal like this. So you need to definitely do it with the other indicators as well. Then let's check it out. Awesome oscillator. It's kinda looks like a MACD, but it's giving less information, so I prefer MACD more. Then, for example, stochastic oscillator showing you overbought and oversold zone. I really recommend to use MACD and stochastic together because they're showing kind of different things. So the indicators is actually a formula that plots lines, also graphs, oscillators based on historical price, volume, or time data. But important thing that it doesn't show the exact future, but it helps interpret market behavior. Guys, by the way, we are closing our trades in the plus. Okay, perfect. So let's open here another sell trade for 2 minutes as well. As you can see, the downward trend is continuing. We can see already more the two lines of MACD crossing each other, going lower in the same direction. Already the red pin bars is below the zero level. It's also pretty strong sell signal. So indicators are used for, first of all, identifying trends to see whether the market is moving up, down, or sideways, but also you can see it just visually by yourself, but indicators also can do it for you. For example, EMA, SMA, MACD also. Then second of all, for measuring the strength, to assess how strong a trend or momentum is, for example, RSI or ADX. At the same time, for finding entry points to spot potential buy or sell opportunities, for example, Bollinger Bands, Stochastic, MACD also. It helps you to filtering the noise, so that's why I like them, because to avoid false signals and make more precise decision, you definitely need that. And why not? Because it's one of the instrument of technical analysis. I know that some people is not using it at all, like professional traders, and saying that, oh, why you need to use it if you can see it by your own eyes and everything. Yeah, of course, with the experience it comes to you, but at the same time, why not use it if it's so useful? Actually, just need to get a mix of the right ones and analyze them. That's it. And also use support, resistance levels, candlestick patterns, and that's gonna be perfect. Everything that we talked about today. By the way, it's 18 seconds to the end of a trade. As you can see, it's going really well. It achieved almost our previous support zone, like the minimum of our price for this time. So it's 4 seconds, 3, 2, 1, and we close the trade in a plus, guys. Perfect. We made such a good result. Let's take a look at our trades. Here it is for just like how many, 20 minutes. I think this is pretty good. So yeah, as you can see, it's not that hard as you were thinking about this. And actually, this is 3 things that you need to know to start. So I hope you like this video, guys. Let me know in the comments if you want to learn more about candlestick patterns or fundamental analysis, for example. Everything is for you, of course. Don't forget to subscribe to my YouTube channel. I hope you already did that because I post here so many information about trading absolutely for free. So I hope you like it. And yeah, I will see you on the next trading session. Bye-bye.